I'm Foreman, and in this video I'm going to be giving a stock analysis of Novacyt by giving my views on the business and whether I would personally buy shares of Ncyt right now. And as always, if you find the video useful or entertaining, please drop one of these to support the channel. Novacyt engages in the development, manufacture and commercialization of clinical diagnostic products for cancer and infectious diseases internationally. They do this by generating an increasing portfolio of in vitro and molecular diagnostic tests by organic growth, innovative research and development, and acquisitions. Ncyt is listed in the AIM markets, but also France's Euronext has a market capitalisation of £746 million and 110 employees. I believe Novacyt to be in a fragmented competitor landscape, meaning that it will likely remain very difficult to track all of their respective market shares simply because they have loads of different product offerings, subsidiaries, and different markets in which they compete, more specifically in that certain sector. I believe it's fair to assume that they are very much a little business in a market with a lot of growth potential, and from that they do have a lot of potential for growth. They've gone as far to estimate that one of their businesses, which is Lab 21, they've gone as far to estimate that it is in an 11.7 billion pound or billion euro addressable market size, with the protein diagnostics focusing in the established markets by providing good quality, high performing reagent products. Furthermore, their targets for Primer Designs, which is another one of their subsidiaries, core molecular diagnostics markets, is approximately worth around 14.7 billion euros per year. And this is on their RUO, which is research use only, IVD, which is in vitro, which I mentioned earlier, and also food pathogen testing, which is basically testing foods for dangerous diseases like Salmonella or E. coli, which cause food poisoning, and also creating research use only products for clinical markets. I would therefore consider Novacyt to be in a very specialised industry, meaning there would likely be, in the terms of knowledge, high barriers to entry. But then on the other hand, I think it could also mean their barriers to entry could be low in terms of capital and investments, as they could more than easily transition into other industries with a similar spectrum, as they are still one of these bioscience companies. But on the other hand, gaining clients or contracts could prove to be more difficult, as the more of the competitors in the industry, the harder it would be for a contract to be built. This means that if they do build up a significant market share in an industry, they're likely to continue dominating and build an organic moat. But then again, so long as businesses have the capital available and the time of investment horizon, then they could likely acquire businesses in these certain competitive niches and therefore build up market share inorganically by acquisitions, which, as I said, is one of the ways Novacyt try to build shareholder value and develop their business. Which brings me on to their financials. If they have strong growth and a quality balance sheet, they could bolster their shareholder returns by inorganic growth, such as the mergers and acquisitions I had mentioned earlier. When looking at their financials, we can see very impressive revenue growth, in which over the last year it has increased by over 10 times when compared to the first 6 months of 2019. You may have noticed I mentioned 2019 and I'm comparing the first 6 months of 2020. This is because they've not announced their full year results yet, and this is due to come any time soon. And this provides an opportunity which I'm not going to quite mention yet, but I will bring up later in the video. We can also see a fantastic uptrend from unprofitability in 2019 to being profitable with very high margins in 2020. Last year they had an earnings per share of minus 0.05 euro cents, and this year they have an earnings per share of 0.61 euro cents, and this really shows the scale at which they've transitioned the company and their levels of profitability. And I hope that this demonstrates the severe upswing in profits and dramatic changes, as you can't even really put that into a percentage. Whilst last year they did have very marginal cash flow, and that was bolstered through borrowing of bond notes, whereas this year they have issued additional shares but have a very large positive cash flow through operations. This has led to a very positive and strong free cash flow. In my opinion, these are very positive trends to have, providing they're able to maintain them. But since it was such a sudden upswing, it's worth investigating why, as their revenue, as I said, has increased by over 10 times in the last year. I mentioned earlier they generate revenue through diagnostics and testing, And this is where they had benefited from the pandemic, which had caused devastation to many other businesses. In turn, they were well placed to provide testing products, which has seen large-scale investments from many countries across the globe into specific diagnostics and testing businesses. In the case of Ncyt, the primary amount of their revenue growth is from Europe, and that is the majority of their revenue share. But then even across the world, their revenues in other locations like Africa and other places like Asia Pacific have actually still doubled. And if you'd like a free share, sign up to Trading212 or Freetrade using my link in the description down below to get a free share when you deposit just £1. When looking at the quality of Novacyt's balance sheet, we can see that it is of a very good quality. This is because their short-term assets outweigh their short-term liabilities and long-term liabilities combined. Furthermore, they have absolutely zero debt, as they had been paying it down in the last financial year. This gets better as they have an amazing cash position of nearly 20 million euros. This means that if they for some reason go back into unprofitability, which is unlikely because I'll talk about this later in the video, that they would be well adjusted and well positioned to therefore mitigate that and have a cash runway. Furthermore, they could use this money to inorganically invest in other businesses occupying different niches that could therefore bolster up their financials for the future. Which brings me on to the future of the business. In September 2020, late September 2020, they'd announced a new supply contract with the UK Department of Health and Social Care. And this was the second major contract that had been given or awarded to Ncyt's subsidiary Primer Design. This means they will have to supply their products to the DHSC, or as I said, UK Department of Health and Social Care, for the next 14 weeks, but up to another 10 additional weeks after that. These 14 weeks alone that are fixed can guarantee an income of a minimum of £150 million for Novacyt. Furthermore, if the UK Department of Health and Social Care decide to extend this contract by a further 10 weeks, then they can gain up to an additional £100 million. To put that into perspective, their market cap currently is £750 million. Their revenue from this contract alone could really be quite a significant chunk of that. And as we mentioned earlier, Novacyt has very high margins, so we can assume that a majority of this revenue can be transitioned into cash. They have no debts, and so they have a lot of inorganic investment opportunities in which they can bolster their own business for the future, which could further compound their growth potential. When compared to another diagnostics business in the UK, you may know of it, Abcam, they have a market capitalisation of nearly £4 billion, yet only a revenue of £260 million. Furthermore, after accounting for their one-off losses that were roughly around £33 million for Abcam, they had earnings of a measly £12.5 million, which is a profit margin of around 4%. We could see Novacyt have a massive growth in their earnings, and certainly because of their high margins, we could see a massive improvement compared to Abcam. And seeing as they are valued at that nearly £4 billion figure and Novacyt is only £750 million, there is potential for a lot of gains or a bag. And I don't necessarily believe that they're going to overtake Abcam because they have a solid track record and history of flawless growth and also a strong balance sheet. But we can assume that they will take some of that market share. Sorry, not market share, but market capitalisation. And I think we can argue that at least Novacyt is due a re-rate or an increase in their value due to the high amount of revenue generated by these contracts. I think there is further revenue for contracts to be given to Novacyt in the future. I don't think they will be as impactful as this one has been, but there's certainly the chance, and therefore I really think it depends on what you believe will happen with the pandemic across the globe for the future. Whilst at the moment in the UK we have very high vaccination figures, and that's quite impressive considering, well, we didn't really deal with this in the best way prior, but maybe you think other countries aren't following suit. There's a high proportion of anti-vax of the population in the likes of France and Spain. This can be difficult for them to build herd immunity, and therefore the pandemic could continue for a lot longer than we may anticipate. And if you believe this could happen, then Novacyt could be a good play to invest in, as they're likely going to have to continue testing. There is, however, uncertainty on their future after the pandemic. Whilst they obviously have their brands and products, How will they ensure more revenue is generated when the pandemic isn't of a global concern? This allows for an individual to invest in the company if they believe the pandemic will likely worsen or stay the same for the next few years, but also allows you for a re-rate on valuation and therefore gives a lot of swing trade or short-term investment potential, but also perhaps an opportunity to buy now and secure a good price for the future. But then again, I'm anticipating for results to be good. If they're worse than that, then the shares could certainly drop, but it is very unlikely. And it's really a question of whether it is truly priced into the current price of Novacyt. For me personally, I don't see this as a long-term hold. I don't like that exposure to macroeconomics and geopolitical tensions, and personally, I think the pandemic may go on for longer than people anticipate, but not as long as some people believe. I think it will be largely dissipated in the next year or two. I don't think by summer this year we'll be fine, it'll be good and dandy, but I do think it will last a bit longer. Therefore, it's not really my type of investment play, especially because I do invest in more secure, mature businesses, which means I have subsequently less risk, but also less reward. But that doesn't mean I wouldn't consider investing in the stock as a swing trade. And if I did this, it wouldn't be in my investment ISA. That's where all my long-term holds are. Rather, I would invest in a general investment account, likely with Trading 212, and similar to what I had done with Argo Blockchain. If you're interested in my Argo Blockchain stock analysis, then click the card at the top right of the video. Thank you for watching. Have a great day.